Assalamualaikum warahmatullahi wabarakatuh. Good morning and peace be upon us all. Let me introduce myself. I am Diki Andrian. On this occasion I will present a brief material on consolidation with acquisition at the carrying value of equity. Although the time is short, I hope my explanation can provide a clear and helpful picture for all of us. First of all, let's understand the term. Consolidation in accounting is the process of unifying the financial statements of two or more entities, usually a parent and a subsidiary. This process is important because it shows the financial position and performance of a group, as if it were a single economic entity. Meanwhile, acquisition at carrying value means that the parent company records its investment in the subsidiary, based on the book value of the subsidiary's equity. That includes paid-in capital, retained earnings, and other equity components as they appear in the books of the subsidiary. In other words, the value used in this recording is not the current market value, but the carrying or historical value in the subsidiary's financial statements. There are several key characteristics of this approach. First, this method is typically applied when an acquisition happens between entities under common control, for example, when restructuring occurs within a group of companies. Second, under this method, there is no recognition of goodwill or any gain from differences in fair value. This means that when the parent company acquires the subsidiary, it simply adopts the book value of the subsidiary's equity. There is no need to revalue the assets and liabilities to fair value, which also means the process is more straightforward and typically involves fewer adjustments. Let me give you a simple illustration. Suppose PT Indik acquires 100% of PT Annex shares for 1 billion Indonesian rupiah, and PT Annex equity value in its financial report is also 1 billion Indonesian rupiah. In this case, there is no goodwill generated. What happens in the consolidated financial statements is the direct combination of PT Annex assets, liabilities, and equity into those of PT Indik, with no changes based on market revaluation. In summary, consolidation with acquisition at carrying value focuses on internal unity, based on existing book records. It is often used for internal purposes such as mergers of subsidiaries or company restructuring. This differs from acquisition using fair value, which is more applicable to external transactions and may result in the recognition of goodwill. That's the end of my short presentation. Thank you for your attention, and I hope this explanation adds to our understanding of this important accounting concept. Wassalamualaikum warahmatullahi wabarakatuh.